Looks like we're pretty much at the highs of the day. Let's bring in Tony Dwyer. He's the chief market strategist, Canaccord Genuity. Tony, welcome back.
Hey, Scott. Great to be with you.
Where's your 10% correction?
Well, it's happened certainly in some of the NASDAQ names, and the SPACs have been hit. A lot of the fluff that was in the market going into the early April period has certainly come out of it. So you're still in this extreme overbought condition, but you have changed the sentiment. The National Association of Active Independent Managers Sentiment Index has come down. So I think it's been this rolling correction, Scott, and I think the next place that it could actually come into play is where everyone is. A year ago today, we had come out with our offensive position in the market. If you remember, I think I did on your show, it was the banks and tanks. Very unpopular. The FANG stocks were ripping. Why would you never want to be in the FANG stocks? And of course, they haven't done anything since August. And I think everybody is positioned at this point for an extraordinarily fast growth economy, inflationary pressure. So everybody's on the other side of the boat now where they're in the cyclical. So if there is to be a bit of a correction, which I believe still over the summertime, I think it's going to be in those areas that everybody's positioned.
Well, I mean, you've been looking, though, you were looking, I think, for a 10% correction in the S&P, right? Well, what about for all the reasons that I just laid out at the top of our program from the conversation that I had with this fund manager as to why you can't be, I mean, look, he said you can't be too short, you can't be too long. But the idea, you had two people talk about Fed tapering. And what'd the market do? So what? Rates went down to 155.
Scott, here's an interesting point that I had to do some research on this because the number one question I'm getting is the same one you're getting. And topic is, how can the 10-year be at a 155 with inflation expectations continually going up? And I'm going to give you an answer that's going to make you and everybody else go bananas. There's more buyers than sellers. Last month, in the month of April, you had 80 billion or 68 billion of treasuries issued. You had 80 billion of Fed purchasing. That doesn't include the government security purchases coming out of the banks. Remember, when you throw all this money into the bank accounts of people with a fiscal stimulus, it gets invested somewhere. And it's not going to get invested in high growth stocks. It's going to go into safety vehicles. So you're having such a significant surge in money within the banking system that's got to get invested that it's overwhelming. The demand is overwhelming.
You tell me why. Tell me why, with a 10-year at 155, that the NASDAQ doesn't deserve to be a lot higher than it is right now. Why does growth, why should growth stocks be where they are if the 10-year is at 155? That in and of itself suggests that the NASDAQ's too low, doesn't it?
Well, the yields haven't really changed in the last month and a half. We've been in this trading range for the 10-year note yield for over a month. And the growth stock, what's been amazing, we use the 10-day rate of change indicator on growth versus the Russell 1000 growth versus the Russell 1000 value. You're seeing volatility that you rarely see, and it only comes into play after a recession. So now you've had this bounce in growth. Remember, a couple of weeks ago, it looked like growth was going to roll over and die and everything was breaking down. I think we have to be very careful in this environment to try and make a big call out of these highly volatile moves. Scott, think about what happened coming out of the great financial crisis and, of course, the dot-com bust. Every recession we go into has a historic and unique reason that drives us into correction or recession, a bear market, and a credit crisis.